So you're thinking about moving to Myrtle Beach, South Carolina, and you're not quite sure where to start. You want to get your home search started. One of the first things that I recommend after speaking with buyers looking for a home is to speak with a mortgage lender like Rob here. We'll introduce him in a little bit. But today we're going to go over a bunch of questions to help you narrow down your financing options. We're going to talk about where to start with a pre-approval. We're going to talk about how much money you need to put down to buy a house and what credit score you need and all that and more. Hey, welcome back, and if you're new here, my name is Nick, and on this channel I talk about things to do here in Myrtle Beach. I give tips and advice about the area, and of course I talk about the real estate. Today I have my friend Robert Ferraro with New Wave Lending Group, and we're going to be going over some financing questions that we typically get. So if you're thinking about relocating to the area, then be sure to hit the subscribe button down below and tap the little notification bell while you're at it, so you can be the first to know about what's going on here in Myrtle Beach. We get calls every single day from people who are moving to the area, so if you ever have any questions or if we can help you find home here at the beach, then you can find all of our contact info down in the description. So one of the biggest things when it comes to financing here in Myrtle Beach is using a local lender, because a lot of people are moving here from out of state and they've bought homes before in their hometown and whatnot, and they have lenders that they regularly work with and they know and they trust and they want to use them. But Rob's going to give us a little bit more information and kind of explain why when you're moving to another state, you should be reaching out to a lender who knows that area. So yeah, go ahead and give us some pointers.
Yeah, absolutely. That is so important, finding a good local lender. I mean, for the same reason why you guys love your neighborhood lender that worked for you when you bought your primary residence and the home you're sitting in now, is the same reason you should find a local lender here. You know, you wouldn't reach out a couple states over where the market's different and, you know, professionals operate on a different wavelength. To close, you know, to count on somebody to close a home you're purchasing in New York or whatever. So for us, you know, there's different nuances about our market. You know this. That's just a little bit different than a lot of areas. You know, a big example of that is condos. Right. Not even beachfront condotels, but any condo that you see or townhome, you know, typically has a very strong HOA with a huge presence, and you know, they manage a lot of the ins and outs of the property, and this throws lenders for a loop when they're not used to working in our area.
Right.
We of course run across this every day. We've worked on so many different projects. We know, you know, what issues come up where. We understand the questions that people get hung up on that we can get through and how to get through them. So if you're planning on purchasing a condo of any type, whether it's a second home or a primary, you should certainly reach out to a local lender. It may save you, you know, 3 weeks down the line.
Right.
The other thing, you know, professionals work very closely, especially in our area. We're a tight-knit, you know, real estate environment. And for the same reason, you know, we work well together. You know how I operate. You know that when you call me, I'm going to answer the phone. I know that I can reach you if I need something. Right. You know, and that can be difficult when you're relying on somebody in a different market who's doesn't know who you are, doesn't have any alliance to you on the next deal, you know, and just communicating throughout the law firm and the insurance company and the appraisal, ordering the appraisal when it needs to be ordered, really first thing in our area.
Right.
All of these different, you know, factors of the market and the home buying process are reasons why you should reach out to a local lender and at least have that conversation with a local lender.
Yeah, I like that last part you mentioned. It's so important, and a lot of times it's not necessarily things that are going to immediately kill the deal. It's stuff that's going to come up later down the line, like you mentioned. And I don't even think it's just with condos, but even with the single family homes and the HOAs and the nuances and all that stuff. It's just a different process down here that, you know, you might be used to in other states, or your lender might be used to. But I think the communication is super important as well. That's something that I notice a lot when I work with lenders from other states, because my clients brought them to me and that's who they wanted to use. It's just, like you said, the communication just isn't there, because They have a little bit less interest when issues arise and things are going a little bit slower to push this deal through, because they kind of know it's a one and done deal. They're not going to do another deal with me, so they're not super interested in keeping me happy and making sure it's a smooth process.
Exactly.
Because they're busy calling back and emailing and communicating with the agents that they're working with in their home state, because they have that relationship. So that's
Absolutely.
the deal that's more important to them. And then also, like you mentioned, we're working with a lot of the same attorneys and insurance agents that we're communicating with. Same reason why you work with your lender, like you mentioned, in New York, because they have the connections and they know people and they can get things done.
Right.
You want to work with a local lender when you're coming to Myrtle Beach.
Absolutely.
And something else actually pretty funny, I just saw it on Facebook. An agent posted they're doing a deal. Their client brought an agent from somewhere up north, a lender from from somewhere up north, and they mentioned they had to tell the lender 3 or 4 times that there was no boiler inspection. They kept asking for the boiler inspection to get the paperwork through to get it to underwriting, and obviously we don't have boilers down here in South Carolina.
Somebody had to explain to them that.
Yeah, a few times.
Right.
So it just delays the process, and then delay can cause the seller to get upset and cancel the deal, and you lose the house. Or even if they don't cancel the deal, they might want some money for the delay that you're causing, because now they can't sell their house and move to wherever they're going. So it's just things like that. We know what we need to get done to keep the process smooth, keep it on track, and hit the timelines and the deadlines and all that.
Like you said, the closing date is so important for a good, smooth transaction. You close when the contract date has previously identified. You're not going to have any of those back and forths with the seller about well, now our timeline's off and this and that. I just can't say it enough how important it is to hit the closing date, and that's something we value, of course.
Yeah, definitely, especially in the recent markets we've been in. A couple months ago, the market was super crazy. You didn't hit your deadline. Now the seller's ready to back out because their home value just increased $10,000 in the last 30 days.
Yep.
So they're ready to look for the next deal. And now that all that's behind us and the market's shifting back towards a more normal and level market, it's still super important, because now maybe as a buyer you negotiated a super good deal, you locked it in, the seller agreed on it, and maybe now they're having cold feet, but they're locked into the contract. Now you miss your deadline, that gives them the opportunity to back out and not really have any repercussions. So super important to hit those deadlines and keep everything on track.
Yeah, and that was a really good tidbit that you brought up on the single family homes. Things like you said are just done differently here. I know up north it's very rare for a single family neighborhood to have managing HOA or I guess much of an HOA at all.
Right.
Here that's very typical, and most every single family residential neighborhood has an HOA.
Yep.
And then if you're talking about a manufactured home or something like that, it has to come with the land. That these are things that people in different markets just don't, even if their every intent was to do it all perfectly, they communicated the best that they could, there's things that they just don't know.
Yeah, it's just different. So
absolutely.
Yep. So now that we've talked about why it's important to speak with a lender that's local to the area that you're going to be moving to, the next thing that I get asked a lot is when in the process should the person buying a home reach out to a lender? And I know that I have my answer that I explain to my clients, but I kind of want to hear your thoughts on that.
Yeah, absolutely. I believe that it's really important to go ahead and take that step pretty much immediately after talking to your agent. They should be your second call, and that way your options. Everything's spelled out for you, especially if you're talking with a good lender. What you're going to do is go through an application and then submit some documents, and essentially we're going to be able to break down exactly what your financing options are, what your monthly payment would look like, how much money you would need at closing, and really get into the nuts and bolts of how it's all going to lay out so that you can make the best financial decision for you.
Yeah, that definitely is all very important, and that's usually what I tell my people too. The first time I talk to them on the phone, I recommend they speak with a lender. And I like how you mentioned this way they can know like how much they're approved for, and also what their monthly numbers are going to look like.
Right.
So what I like to say is it's important to speak with a lender before going out and looking at homes. This way we know how much we can spend, not only how much we can spend, but how much we're comfortable spending.
Absolutely.
Because if you know those monthly numbers and it's kind of getting close to what you're comfortable spending, then, you know, we might have to rear back what we're looking at.
Right.
And sometimes it works the opposite way as well. You know, you might be looking at homes online thinking like none of the homes kind of fit what you need in your price point and your budget. You're not really liking anything and you're getting discouraged. It can work the opposite way as well.
I've seen that
where they're
many
actually
times.
approved for a little bit more than they thought they would be. And they actually, the monthly payment's not as high as they thought it was going to be. So then we can actually expand the budget and look at some homes that better fit their needs.
Absolutely. You know, and just to feed off that, it's a must before you go look at property if you're serious, because the sellers these days are not really going to entertain an offer without a pre-approval letter. It's pretty much just, you know, set in stone. I mean, I'm sure you see that and you would advise your sellers the same. You know, you need 100%. A pre-approval letter these days to know that this is a real deal. It's going to work.
It's almost always listed in the listing, in the agent notes. It says, please submit all offers with a pre-approval letter. And a lot of times they have a specific lender that they want to get that through, which again is so important that you contact a local lender, because a lot of times they have that on there just because they don't want to be dealing with an agent or a lender, from out of town, who again might not be able to get the job done. That's why they want you talking with their lender. But if they see that's a local lender and, you know, Rob does a lot of business in the area, a lot of people know him, they'll be comfortable with that letter.
Right, absolutely. It does make a difference when you submit that. If you submit a Wells Fargo pre-approval and my pre-approval, there's going to be a big difference to the person looking at it.
Yeah, and do listing agents, do they call you, like, let's say I submit an offer for my buyer and I submit your pre-approval with your name on it. Is that listing agent calling you? Does that happen pretty often?
Yeah, a lot of the times they do call me, you know, and I encourage that. I a lot of the times tell the buyer's agent, have the listing agent give me a call if there's multiple offers, because, you know, that gives me an opportunity to, first of all, bridge that communication gap. You know, if they call me and I answer and I tell them, yeah, call me anytime, they're going to feel really good about who's handling the buyer's finances. Yeah. It also, you know, gives me an opportunity to let them know that they have a very strong offer here, and, you know, without giving, you know, much information about the client, just let them know, hey, they've been checked out, they've been documented, everything looks great. You know, we don't expect any issues.
Right. Yeah, this way they know that it's really just getting through the process and that there's not going to be any unknown issues that arise. I mean, you never know, something could pop up, but, you know, Rob does this, he knows what he's doing. So if Rob says it's okay, the listing agent is probably going to understand and, you know, gives you a better chance of getting your offer accepted.
Yeah, feels a little bit of confidence, makes them feel a little bit better. When they're talking to their seller, they're going to relay that confidence, you know, versus the person they couldn't get a hold of, or the you know, out-of-town lender.
Yeah, very cool. So now that we know when's a good time to reach out and speak with the lender, can you tell us a little bit about the process? So you hang up the phone after speaking with a client. What are the next steps after that? What goes on kind of behind the scenes, and what can they expect?
Yeah, absolutely. So we talked about going through an application. That's step one, gathering the client's information and documenting the income and the assets. Okay. At that point, let's say they're pre-approved. Right. They have a pre-approval letter. We understand that you're pre-approved up to $350,000, right? So part of that is, you know, getting you squared away and understanding what your options and what you're pre-approved up to, but also staying in touch with the agent, as this is a team effort, and letting you know that, hey, we're pre-approved up to this amount. Okay. You have the pre-approval letter in your inbox. Let me know if you need anything else. At that point, you guys are looking for property. You're, you know, doing your thing, going through the home search, the fun part, right? Opening doors. Once you get an accepted contract, then ball's kind of back in my court, right? So we go into contract. I'm going to reach out to the buyer directly. We're going to, assuming we have all the documents and everything, we're going to lock the interest rate and disclose the file to to the client so they understand their terms, everything's right in front of them.
Okay.
From there, we're going to move forward and we're going to order appraisal and we're going to order title work.
Okay.
We're also going to have the client start looking around for insurance quotes on that property.
Okay.
Right? So while all those three things are being done, we're going to send the file into underwriting. The underwriter is going to review the file. And if there's anything that we didn't address, this is where they go a little bit deeper. They look for, other addresses in your names and, just anything. If you've had recent credit pulls, those will pop up. Anything that may cause for new monthly payments or,
right.
Other obligations in the past that may, creep up on us in the future. So we're just doing our due diligence. At that point, the underwriter is going to give a conditional approval. Okay. And we're going to send a list if anything else is needed from the client. We're going to send them an email. They'll send those a lot of times. It's sign this and give us a new pay stub. We'll give that back to the underwriter, and at that point, we're hoping that we have the appraisal back and the insurance back. We'd love the title work back then, but it's may not be the case.
Right.
And then we're going to get all those documents together, and we're going to push it back to the underwriter. And at that point, what we love to see is a final approval, or we're just waiting on this third-party service, title work, or whatever.
Gotcha. Okay.
So now we're really we're nearing the end of our process. We're going for the final approval. We're getting that clear to close. Once that's wrapped up, the last step is actually to balance the closing costs.
Okay.
Because at the beginning, each person's closing costs are different, right?
Right.
Your closing costs are made up of what you need throughout the process. Now, most of them are pretty similar, but we don't know exactly what those are going to entail until we're through the process.
Right.
So that's the last step, is to balance that closing disclosure and give the clients the final closing costs, the final wire amount, and they're sending their funds to the attorney, and we're hitting the closing table.
Awesome.
Yeah.
So all that entire part, after we find a home, put in an offer, and the offer gets accepted, do you ever go through that full client acceptance, getting them fully accepted through underwriting before they find a home? This way, once they find the home, it can be a little bit quicker of a process. Do you ever do that?
Yeah, we have buyer ready programs is what they call them. And especially last year when we were in a market where it made a big, you're competing with so many people, there's cash in the market. This was a great tool to basically gather documents in an application and give it to the underwriter. Right. And have them give us a conditional approval, that basically states once you go into contract and you find that home and we're in the process, these are the last items that we're going to need from you. And then we're going to be able to give you the clear to close once, appraisal. It's contingent on appraisal and title.
Yeah, there's still a couple of things that have to get done, right?
But it certainly gives a leg up when going to make that offer and letting the seller know, hey, we're not just pre-approved, we're actually approved. We're conditionally approved.
Right.
Underwriting has looked at our scenario.
Nice. Yeah, definitely not as important today as it was a year ago, but there are still scenarios where it comes up. Certain price points, the market is still super hot, or there's not as much inventory. So again, just to give you that leg up.
Absolutely.
If we think we need it. Awesome.
Yes.
All right, so far we have talked about why you should be using a local lender, local to whatever state or area that you're moving to. We talked about when you should reach out and have the first conversation with the lender. And we talked about the entire process from start to finish, kind of gave you a brief overview. Then we're going to answer one more question, a super important one. We're going to do some more questions, but that's going to be in a separate video. So if you're not already subscribed, be sure to do that below so you don't miss that video. But this question is something that a lot of people get worried about, especially a lot of first-time home buyers because they've never been through the process before. But what are some things that you see that come up, some of the most common things, reasons why people cannot maybe qualify for a mortgage today, some things that they need to work on in order to be able to qualify for a mortgage?
Yeah, absolutely. So there's really three main reasons why somebody wouldn't be ready today, and would need kind of a plan.
Right.
The first one being short on the credit score requirement. Right. Yeah. The other one is just having a large amount of monthly obligation or monthly debts compared to their income. Right.
Yep.
The other one would be assets, not having the available down payment plus the closing costs needed by the time closing comes.
Gotcha.
Right.
Okay.
So, or at least having a plan to get there.
Right.
There's a few different creative options that people can use and maybe don't even realize that they can use to be able to come up with these funds, or to be able to help their debt scenario, or to be able to help their credit scenario. So if you'd like to, I'd be more than happy to kind of break that down in a separate video.
Yeah, we can go over that. We're going to do that in a separate video because this one's getting a little bit long. So again, if you guys aren't subscribed, be sure to do so down below because we're going to be going over the debt to income ratio, why that's important, and how to kind of get that in check so you can be approved for your mortgage. We're also going to talk about the credit score requirements, where you need to be at for different type of loan programs and things like that. And we're going to go over some different options for collecting money for your down payment, where that can come from, where it can't come from, and things like that. So that's going to wrap it up for this one. We want to thank you for watching. Again, all of our contact info is down in the description below. If you want to reach out to me, if you want to reach out to Rob, feel free to do so, and we'll see you in the next one.
All right.